After hitting all-time highs in August of 2020, the price of gold has been firmly in reverse. Just this month, the price has slipped back towards 1680, which are the worst levels since June of last year. It's a big week this week with interest rate decisions from central banks. Are we finally going to see the short to medium term fortunes of gold turning around? In the summer of last year, we saw plenty of momentum for the gold price, rushing from about $1,700 an ounce in June, and then early August we had those fresh all-time highs at 2,075. Now, no market moves in a straight line forever. There are always going to be corrections, but this correction is continuing. If we look at where the price is now, as I say, we slipped back March the 8th, back down to around about $1,680 an ounce, back down to where we were in June last year. And I think it is interesting here. I think it's been, for me anyway, a frustrating market to try and trade this year. But we're back to some interesting levels. We have, I think, these old lows from April last year ahead of 1650 an ounce. So if the price of gold is going to turn around anywhere, then I think we're getting pretty close. But that correction is still in place. So I think there's quite a bit of conflict if you're a trend follower for gold at the moment. So as usual, in this video, I'll talk about what to watch out for in the days and the weeks ahead. There is an awful lot going on this week that could have an impact on the US dollar and correspondingly, of course, on the price of gold. Then we'll come back onto this, look at it in more detail and see what our next trade might be. At the moment, there are no trades on gold in the open positions. The biggest winner continues to be crude oil. As we saw, crude continue to push higher. We've got some silver trades in there that are slightly against us at the moment. Nothing on gold. Let's see if we can change that when we come back and look at it in more detail. Hello, I'm David Jones from Capital.com, and I thought we'd do an update for the price of gold. I think it's been quite a frustrating market, I think, in recent weeks or this year. It has for me anyway, but I'll talk more about that as we get into this. So as usual, in this video, I'll talk about what's been happening in recent weeks, what to look out for, what the threat is perhaps for weaker gold prices even still from here. Then we'll jump back onto the platform, look at things in more detail and see if there's a trade to do. As usual, if you're watching this and you haven't subscribed, if you could click on subscribe, it does help support the channel. We now do these regular live streams on a Friday at 2:30 UK time. They're proving really popular. If you're subscribed with the alarm bell clicked, you get notified whenever we're about to go live. Anyway, let's get into it. Let's take a look at gold in a bit more detail and see, is it actually trying to form a base down at these levels, or are there further drops to come? So if we wind the clock back to the summer of last year, we saw all-time highs for gold in August 2020, trading up to about, was it $2,075 an ounce. But since then, we have had a distinct lack of upward momentum. No market moves up or down in a straight line, but gold has really struggled to build on any sort of further recovery. If we look at the chart since then, we've got a definite correction going on. We've got the market, it's been in a downtrend since August last year. It did look as if it was trying to break out of that at the beginning of this year, but that hasn't happened. So at the moment, at the time of recording, the price of gold is down by about 15% from that August all-time high. And I think the performance of other financial markets here is clearly having an impact. If we look at stock markets, for example, just this month, again, we've seen all-time highs for the S&P 500 and the Dow Jones, the narrower US stock market index. So I think when we're seeing other markets gain and some positivity about an economic bounce back, that clearly does take the shine off gold. We could well see some volatility this week. It's a big week for interest rate decisions and chat about central bank policy. So we have news coming out of, in the US, the Federal Reserve on Wednesday, the UK, Bank of England on Thursday, and then the Bank of Japan on Friday. So with markets concerned in recent weeks about bond yields and the potential threat of future inflation, these announcements will be watched really closely. They clearly could have an impact on the US dollar, which again has an impact on the price of gold. So I think we could be in for a volatile week. And on that US dollar, the threat for gold is further recovery in the US dollar. Gold moves the opposite way to the dollar. If you look at the dollar index, it hit a 3-month recovery high during March. If we saw further strength for the dollar, you'd expect more pressure on gold. We do have, quite conflicting trends at the moment on gold, which I think, for me as a trend follower, has made it a bit of a challenge this year. The longer term trend, as we'll see in a second, still definitely up. The trend since August last year, so we're 7 months or so into that trend, has been down. Let's take a look at the levels to watch, then we'll jump back onto the charts, look at these trends in more detail and see what the trade might be. So a few hurdles on the upside, most immediate ones, 1760, after that just above 1800. Where we are now on the downside is interesting. We've got lots of support at 1660 and 1670 from last year for the price of gold. And it does feel as if, there is a bit more of a battle going on here with the buyers coming back in. So potentially really interesting support down here. But let's put some color on these numbers. Let's jump back on the charts and look at things in more detail. As usual, because this is a gold video, we start with the traditional long-term trend on gold. This is going back to August 2018. So we're 2.5 years plus into this trend now. I think this trend did a good job on the way up, came close to touching it again in March of last year when we saw world markets sell off. Then, of course, races away to the all-time highs. And we're back where we are now. That trend line is coming in ahead of $1,500 an ounce. Perhaps not too relevant at the moment with the price trading a couple of $100 above that, but one to watch if we do see it under more pressure. Let's zoom in on this correction that's been going on since those August 2020 all-time highs. We made some good profits on gold last year going into the summer on the back of the trend, but it has wrong-footed me this year. And of course, that's what stop losses were for. I thought this move at the beginning of the year, you can see it here, early January, when the price pushes out and breaks out of that trend line, was perhaps the sign we were going to see some strength returning to this market. But it hasn't panned out that way at all. So now I think what we've got to do when it comes to a trend line is redraw this one. So for me, at the moment, that potential trend line, it's only been touched, a couple of times, is coming in around about 1900. So it's about, 10% higher than the price is now. So even if we were to rally up through 1800, technically that correction is still in place. And this is what I mean when I say we have conflicting trends. The longer term trend is still definitely up. The short to medium term trend, I suppose we call it a medium term trend, is still down. So I don't think there's anything wrong if we want to be a buyer of gold, to be patient, to wait to see how this resolves itself. I have put a 20-day moving average on the price here. And you can see in the latest leg down since, pretty much the beginning of January, that 20-day moving average has done an okay job of keeping any rallies contained. So again, I wouldn't really be in a hurry to buy in at the moment. If we take a look at the RSI down here, it's been oversold for a while. It went oversold the third week of Feb, but as is often the case in strong trending markets, and I think we have had a strong trend this year on the gold price, it's moved to an extreme too quickly. It would have got us in to a trade too quickly. So for me, with the RSI at the moment, until we see some sort of resolution to this correction, I'm not going to put too much weight on the buy signals from the RSI. But what I am going to put a lot of weight on are the levels from last year, almost a year ago now, about 11 months ago, April last year, when we had the market sell off heavily in March as the US dollar strengthened. People were looking for a safe haven as the coronavirus really started to grip the world. We saw the market bounce back and then sort of stabilize through April through to June, but holding ahead of about $1,660 an ounce. So I think this is really important support for the price of gold. Let's not forget, support levels aren't some sort of mystical hocus pocus. They're levels where we've seen demand come in the past. So last time around, after we saw the really heavy sell-off in March, the market decided that 1660 was pretty much good value for the price of gold. So it's interesting to see what happens now. So far in March, we've seen the price trade down to $16.76. So come within $16 or so of that old level. So I think for me, if the price of gold is going to turn around anywhere, then we're pretty much there now. So I suppose an aggressive trade, if you really had to buy gold at the moment, is to be a buyer at 1730 with stops the other side of 1660, say 1640 or a bit further than that. Personally, you know, it's very rare you see markets execute a really sharp reversal ahead of major support, particularly given the fact that gold has been trending lower since those August all-time highs. So I'm happy to wait it out. I'm happy to come back to this in a week's time and see, are we building a base down here, or have we slid lower still? Because I think if we slide through 1660, then we do start targeting the March trading zone, you know, running from 1450 through to about 1570, that sort of area. So I think if 1660 is lost, the price of gold is going to come under more pressure again. And we start looking then at that longer term trend line. So for now, I think we've got an interesting week ahead, given what's going on with interest rates and the US dollar. The price is under some pressure. It has held for a week or so above this old support, but I'm quite happy to be a bit more patient down here and wait to see if we build a base. And I think if we do get a base, it's a great trade potentially in terms of risk versus reward. Because if that old trend is going to resume, then the ultimate target would be for a run back to the old highs at 2075. So from here, that gives us more than $300 of potential upside if we do see the market start to turn here. But as we've seen in the past, you know, last March accepted, when gold sells off, you know, we often get plenty of opportunity to buy in on a retest of the support, like we did in the past, as I'm highlighting here, 2018 and 2019. So I just want to watch 1660, see if we see the buyers come back out. I'm happy to sit on my hands for now and see if gold can form some sort of a base down at these levels. That's it for the update. Don't forget those central bank meetings this week could be interesting for the dollar and the knock-on effect for gold. We'll catch up with them all in Friday's live stream. But for now, from me, David Jones and Capital.com, we'll leave things there. Good luck with your trading. For more trading videos just like this, please subscribe to our channel.